very same day, the whole entire day's trading range sat completely within the prior day's trading range. So what I'm suggesting is the market was trying to push one way or another, but the bulls and the bears couldn't kind of agree, right? So in that instance, they couldn't even break out of yesterday's trading range. So what's now going to happen is there's a specific way we will deal with inside days. And when I make there's going to be a video just on inside days that you can get all the exact detail. But for now, just understand that we're going to be looking at a break above or below this level. So in essence, what I'm suggesting is we'll have two types of orders. We don't really care who wins the next day. We're really just going to say whoever's winning, we want to follow them the next day. So in our example, we'll look at the inside day, and we'll say if the following day, so remember an inside day, in addition of a reversal day, is a bullish reversal day, is where on the day it makes a low lower than the day before it. But in this case, it closes higher than the day before it. So basically what we're saying is, in this example on the screen as an example, the bears were pushing that one really, really hard. It was actually gone past the point of yesterday. So they actually pushed it lower than yesterday. And then the bulls came in and they just pushed it right back up and actually closed that day better than where they did yesterday. So in that sense, we're again saying, oh, there's a bit of a change. This is kind of a unique day, right? It's not the same as every day. There might be some bullish interest here. So the next morning, we will position our bias towards the long side of that day. Now remember, we can get bullish reversal days and bearish reversal days. And I'll talk to you about the context as to how we're going to evaluate relatively the strength of this in context again.
To another session like that. To those who were tuning in last week, Friday, we were talking about the candlesticks, the inside bars, those are a short explanation about what we talked about last week, about the inside bar. Where can you spot a candlestick and that tells you that this is a trade, right? So that's pretty much the analysis or explanation about how to spot that. There's more video that you can get them on our academy. It's Globex 360 Academy, and on top of that, also we do have we do post all these videos presentation. When you ask about it on WhatsApp, I can send you a PDF. So you don't have to worry about much in terms of if you didn't hear me clearly or correctly. You can always request it for the PDF and you get a PDF. As I said earlier on, that if you have any questions, please, man, you can stop me and ask any question that you don't understand. So let's just jump quickly into the session that will prepare you guys today. My name is Yusuf. Probably I think you know me. I'm the portfolio manager at Globex 360. I'm one of the guys who take care, your accounts, making sure that you're making money, making sure everything goes, accordingly. So what do we prepare to you guys? We prepare about, to understand the time frames of what we trade, to understand the sessions, what we trade. With the say yes. Is there a question? If there's no question, please mute the mic so that you shouldn't have any feedback, ne? When you're talking. No, it's fine. All right. So as I said, that we're talking about the time frame, the forex sessions, that you can be able to trade, and then we're gonna have a little bit of a review. Okay, so we're looking at Gbp Usd. It's called the Great British Pounds versus United States dollar. So if I may ask, which instrument is the best instrument according to the way I explained earlier on? Right? Again, I don't know if you guys know the GBP, right? The guys in the room, they're saying the GBP. Is there anyone who said something else? Okay, no. We are all together on the GBP. Now, the GBP is the best instrument, right? All right, ladies and gentlemen, in 10 minutes, the Zoom is gonna cut. Please join in so that we can finish up the whole another session, another part of the session, okay? So the GBP is the base currency. And when you look at the GBP, a Great British Pounds, where is it belong in a sessions? You find out it belong in a London session, right? Because it's a pound from London. So what you do, the GBP, in order you to capitalize, to make more good profits, and to actually have a clear view of the chart of your instrument, you better trade GBP when the London session open. So you find the clients, they are trading GBP right now. We are in a New York session. It's no longer having so much volatility. The volatile on this instrument, it's actually slow. When you check, let's check it on a chart here quickly. I don't know if you can see. So I throw the GBP, and if you can see, look at the movement. Look at how it's actually moving. If you go to a bigger time frame, you won't make so much money here. In order you to make more money, you needed to get to the time it had all these, you see this spike going all the way up. You needed to be on this time. And if you look at it on this time, it will be the London session. So this was the London session. After London session, it comes 12 o'clock, it starts playing around. Matter for the fact that today, there is there was a NFP news. That's why you can see there's a little bit of a spike. If it didn't have NFP news, it could have played around like the other candlestick that you are seeing before. All of these, they're gonna play around like that. There is no much volatility at that time. Okay, so let's jump in from Euro GPY. As we know, the time the currency base, it's a euro. The Japanese yen is not the current open when the New York session open. So they are different with the indices. The indices, you can trade them during the whole day, but when it comes to the stock, you have to only trade during the New York session. All right. Any questions so far, or so far so good? Okay, I assume that so far so great. Is the boy come? No. Okay. All right. So don't forget, ladies and gentlemen, that we only have maybe 4 minutes, and then it will cut. And let's tune in again so that we can finish up our presentation. Okay. Any questions so far? Are we good? Oh, thank you very much, Nicole, for joining in. Okay, everyone, can you see? Can everyone see this? Okay. All right, I can see there's a text. Okay, you were asking analysis pay. I don't get it. What do you mean when you say analysis pay? Analysis pay? Or I've already covered that. All right, cool. If there will be no question, then that's good. That's good. All right. So now, when is the Forex trading closed? Right? We need to understand when it's a Forex trading close. Ladies and gentlemen, Forex trading doesn't really close. It only closes the biggest days that Forex trading close is from a Christmas Day and the New Year's Day. That's when the markets, that's when all these stock exchange, they are not opening, right? Johannesburg Stock Exchange, which is down the road here in Sandton, it doesn't operate on Christmas Day. New York Stock Exchange, London Stock Exchange, every stock exchange, when it comes to these days, it doesn't operate at all. Okay. Sorry man, this Zoom thing. All right, so now a forex trading strategy, there's a couple of strategies that you can go through, and and if you were from last week to last of last week, you could have been able to understand and to see the strategies that I was sharing from last week. To be a successful trader, there are many qualities and attributes that you need among what you analyze: persistence and tenacity, the ability to make a quick decision, the ability to understand, all right, so it cuts. Yeah. We are also linking in again.